What's going on, everybody? Happy Friday. Glad you could join me this Friday for the weekly close live stream. I already see some people posting in the chat, familiar faces. I do this every Friday. If you guys got something to talk about, want to look at, I will give you my opinion. That's just what it is. You may not like it, but my opinions tend to be right. So, hey, what's up, Crypto Freelancer? Thanks for sticking up for me in that comment the other day. I decided not to respond to the negative comments on the TradingView post. It's kind of interesting. I've never really had that big of an audience where my posts go out to so many people, but I guess it shouldn't be surprising how people on the internet behind the veil of anonymity like to talk, just be mean and stuff like that. But yes, what we're talking about is a post I made about Bitcoin a few days ago where I was using Ichimoku, which I'm going to talk about in today's live stream, and they saying that the Ichimoku was not being read correctly. That's fine. I've only been doing Ichimoku for about a decade now, so it's really had me go back to simplicity. Also got a question on Discord for a couple things to look at stocks-wise. More than happy to do that. Like I said, stream this every Friday, 4 p.m. market close on Discord, TradingView, and YouTube, simulcasted. Let's see. What's up, Jen? You don't hear anything? Do you guys hear me okay? Let me see. My Shure mic is going. My mic's lighting up. TradingView, you guys hear me? YouTube, can you guys hear me? Loud and clear on YouTube. Okay. Hold on, let's see. Can you... Sounds good on YouTube. Yeah, so it's coming through the OBS pretty good. All right. Jen, I think it's just you. So see if you can get it through YouTube. Because my mic's lighting up. I'm not sure why it wouldn't do that. So, okay. Well, haven't heard anything from the TradingView folks, but hopefully we're doing good there. All right. Sounds good on TradingView. All right, Jen, it's just you. Sorry, man. Hopefully we can get that fixed. All right. So, yeah, let's talk about this. So I've been kind of going back and forth with some folks in my crypto communities. Most people that are big into Bitcoin are going to be perma bulls, and that's fine. That's fine, because over the long run, if you go back years and years and years and years and years, Bitcoin has indeed gone up, but it hasn't always gone up, and it's had bear market cycles. It's had crypto winters, as we've called it, and we are in one right now. We're not in the first. We are actually in the fifth. And what I've tried to do by posting updates when I see a major change in price action is help people navigate these movements, because I happen to have experience in all of these up and down cycles. And people seem very, very excited to listen when I talked about in January, when Bitcoin was coming out of the Daily Ichimoku cloud. Now, you can read into lots of different things using the Ichimoku cloud, but to keep things simple, despite the years and years that I've been working with this, studying it, teaching it, the simplest way to use Ichimoku is to look for price when it comes outside the cloud and match that up with the lagging span, or as I like to call it, momentum, at the same time. So price comes out of the cloud at the same time as you get momentum. Really good textbook yes, no, Boolean, true, false. If you look back in Bitcoin Daily on Friday, November the 4th, 2022, price got out of the cloud there, but momentum did not. And so that was not a breakout. And that not taking this bullish breakout, not DCAing in, waiting for a better opportunity, instead of jumping in there or getting in through the entire cycle of 2022, you were able to avoid the FTX crash, which happened late November. And then here, when I made a post about it finally breaking out of the cloud, now people are really excited. They want to hear it's good to buy Bitcoin. And so because this signal triggered, it was a textbook example of how you have a trend reversal after a long bearish trend. Then, of course, the second post back in March on the banking FUD, the banking crisis, all two of those banks went bust, meaning that, I don't know, the world was going to end. Who knows? Brought Bitcoin down, because Bitcoin was still a risk asset, to a 50% level, basically pulled it back to that Ichimoku cloud. That was another buying opportunity, another excellent buying opportunity people were very excited about. But then as you go up a little bit, now you have people posting on Twitter about how Bitcoin's going to go to $1 million in 3 months. Well, that was that last leg that the retail, the latecomers, the chasers, the FOMOers needed to justify buying it 4 or 5 months into a bullish trend. And now we've done the exact opposite this week by breaking down outside of the cloud here. Now, someone posted this to me earlier this week where we really only had this little bitty flash below the cloud. That's technical analysis. It doesn't mean we throw it out, because it still met that criteria for a trend reversal. Now, this could cancel out if price can do a full retrace up to here and get out, and then that would be a bullish continuation. We would come back up to those highs. And I guarantee you that people are going to be posting me, it did not work. Technical analysis is useless. But I hope those same people that, if this transpires, are wanting to go and go like, I hope they're going to give me a good pat on the back if it does go down, which is the most likely, the most probable event now, that we will see some sort of retrace. Where is it going to go? Well, I would look for a 50% retrace from the start back in November, the bottom of this recent cycle, down to only about maybe 23,000. So I think that a 23,000 buy would be a very good pullback. We'll evaluate it when it gets there. But that's very likely where this bearish trend is going. We're not going down to single thousand digits or anything like that right away. But it's important to note that just as the signal trigger for us to get in on the upside, it's also a signal to, well, if you're a trader, possibly go short or hedge, but definitely look for the next support that we are trying to reach, rather than just be completely dismissive of anything that is not Bitcoin go moon. I get it. We have to believe that Bitcoin is good money. One Bitcoin is worth one Bitcoin, but let's be real. Everyone still values Bitcoin based on what you can trade for it in fiat right now. We're just not there yet. So this is how I look at it, and I think people should too. I think people should make good decisions. Meanwhile that all this has been going on, the stock market has been ripping. You know, stocks, these boomer things, these representations of ownership in companies that produce goods and services, you know, stuff we don't care about if we're a crypto person, because all this is going to go away, right? You know, we're not going to need companies to produce things like, you know, sugar water or Teslas or groceries, are we? No. Or cruise lines, for that matter. No. These things are still around, and I think that people, the reason that I like technical analysis when approaching anything is because it's transferable. You don't need to know the fundamentals of one thing. In other words, you can trade Home Depot the same way that you would trade Bitcoin by looking for the same patterns. And that's why I like to use that and why I like to teach it. So let's take a look at comments. Again, if you guys have comments, tell me I'm wrong. Give me your other opinion. That's fine. I'll defend it. This is just the way I look at things, okay? And it happens to work a lot. I mean, over the course of Bitcoin's history, if you go back through the Ichimoku cloud, I challenge you to look for the times that it has broken out of the cloud. More times than not 100%. A lot of people criticize technical analysis because it doesn't give them 100% value. Well, you know, I don't think that's a very accurate comparison, because if you 100% of the time think that based on your, you know, fundamental opinion, it's going to go up, well, that didn't really save you from this entire trend down. Whereas having a few rules about when you're going to buy and when you're not, that would have not let you miss the big run up in 2020 and 2021. I mean, when it got outside of the cloud, it was late into the COVID dip. 8,800 was when it triggered in 2020. Kind of, if you missed that, you could have gotten into it around here. And then when it finally trended to the upside, starting about October of 2022, it never looked back, and you would have been in that trend if you just looked at that simple metric. It didn't let you catch the bottom, but it also would have had you get out at around 48,000 rather than sitting there and carrying it all the way down. Also, same thing happened in 2021. Again, about 50,000. Basically, you could have bought twice as much Bitcoin if you had just followed this and waited patiently. But that doesn't work for everybody, I understand, but hopefully those that watch and appreciate my content can learn that and appreciate it. So right now, to sum up, TLDR, I'm looking for Bitcoin to pull back to 23,000, the retracement of this entire year's move. And officially, the bullish trend that got us here, the bullish trend everyone cited as Bitcoin being up. How much is it up this year? Bitcoin from January, it got up to 86%. Pretty good bull run, and it's still up about 60% now. So this trend everyone's talked about this year has technically ended. Doesn't mean that we're going down to low numbers. It just means that the bullish trend, the breakout has ended. And as a trader, if you're playing the Ichimoku breakout, you close it and you wait for the next opportunity. And that next opportunity may be getting back above that cloud. I had a discussion with someone about this style of trading, and they questioned me. They're not a trader. They're just a regular IT working kind of guy. And I told them you should really wait until the price gets back up to about 29,000 before you start buying it. And he said to me, like, well, why would I do that? You know, it's cheaper now. His question makes a lot of sense. Like, why would you wait until the price was higher to buy it as opposed to buying it when it was cheaper? Or when it goes down, why would you buy it? Well, that's because you want that confirmation. You want to confirm that trend using some rules, some things that are time tested over the course of Bitcoin's history and all instruments history, where if you're buying something going up, let's say you buy it, it should keep going up, shouldn't it? But if something is going down, then it can also keep going down. So you want to see price getting into a trend, because if we go back and we look at all the trends that have got us here, you know, you had ample opportunity to buy something higher and then sell it higher. Buy high, sell higher, basically. But if you try to start buying something when it's on the way down, well, that's when you can get really, really hurt. And I don't want to see people hurt. And usually people take a little whiff of their a little bit of copium, and they say, well, you know, Bitcoin is going to be priceless one day, so it doesn't matter what price I buy it at. If I bought it at 60K, well, okay. To that I say, well, you could have had 3 times as much Bitcoin if you had just waited. So that's the argument I make to that. All right. Sailor says BTC is going to remain the best buy. Well, of course he does, because what else is he going to say? He's pretty well invested in that. Basically, either Sailor's going to be a legend or he's going to have documentaries of American greed made about him, because telling people to mortgage their houses and their businesses when Bitcoin's at 55K, I just don't think that was smart to tell people. It just wasn't. And I really want him to be held to that standard. I want him to be held to, look, I post my trades. I post my levels when they happen. Win or lose, I'll own up to it. I don't really care, because as a trader, I know I'm not going to be right all the time. And if people want to come back and say, like, oh, you were wrong about this one thing, it's like, well, here's the 12 other times I was right. I want people to hold Sailor accountable for telling people to buy Bitcoin in February of 2021, mortgage their houses to get Bitcoin after he had bought $2 billion worth of it on credit. Like, I want people to hold him accountable. I want people that took his advice or even just listened and liked it at the time to say, like, you know what, Sailor, I like Bitcoin like you, but I think that tying it inexorably with interest rates, as you did by buying Bitcoin on credit, it was not really a good thing for the ethos. And I don't really think you should be our spokesperson. But nobody listens to me. Nobody listens to a libertarian, because we don't win elections. Anyway. All right. So I saw that there's a lot of news this week, Free Gen X Bear. I did see there's 2 ETFs that were filed this week. Let's see. Bitcoin ETFs in news. I saw 2 this week. I think ProShares is trying to do one, and they're the ones that do lots of other ETFs. That's going to be, I think that's probably actually the bigger news than BlackRock. I mean, BlackRock is applying for a spot Bitcoin. Now, here's the interesting thing. It's not the first Bitcoin ETF. Let's bring this over here. So you guys are looking at it. So BlackRock is not the first to apply for it, and ProShares is also trying to do it as well. They're not the first, but it kind of makes you wonder if they're going to get accepted. If they do, I'm not saying that sounds like regulatory collusion, that a big institution would do it, whereas the Winklevoss were not able to, Grayscale was not able to. Those were both rejected. The Gemini or the Winklevi twins were trying to do it, but they're trying to do a trust. Okay, um, see, that's different. See, I think just for the layman, they're saying it's an ETF. Let's see. Here's why it matters to the crypto industry. Before I even read what the financial news says about what it matters to the industry, um, let me give you a little history lesson. So when the launch of Bitcoin spot futures CME, so the launch of Bitcoin futures was December the 17th, 2017. So this is everyone was looking for this. Everyone was looking, oh, well, the CME, the Chicago Mercantile Exchange, is going to launch a futures product for Bitcoin. That means people are going to buy more Bitcoin, right? That means Bitcoin go up, right? Well, remember that date, December 17th, 2017. Let's go find that on our chart, our price chart, our representation, our history of people's feelings about the price of something. Here is your December 17th, 2017. So was the launch of a terrestrial, mainstream, boomer, whatever you want to call it, was your widespread adoption product launch of something tied to Bitcoin bullish for Bitcoin? No. It actually marked not but the top of the 2017 bull run that day. Wow. Well, I guess it just meant that people were able to short the futures, huh? Or what it actually means is that the run up was predicated on people's expectations of the futures product launching. In other words, buy the rumor, sell the news kind of thing. You remember when Dogecoin was on its big run up, and Elon had a host gig on Saturday Night Live. You guys remember that? And everyone was looking for Dogecoin to be $1. Had so many. I didn't touch it, but so many friends were looking for that to get to $1 on his appearance where he was, and he did say something about to the moon or something. I can't remember what he said about Dogecoin, but this whole run up was predicated in the weeks prior. People were buying that last leg based upon the bullishness of he's going to be on Saturday Night Live, and that was the top. And it seems counterintuitive, but let's stop there. Let's not see it as counterintuitive. Let's see it for what it is. People's expectation. People buy something. They don't buy Dogecoin because they think it's going to be the next money. No one had any qualms about Dogecoin actually being useful. People were buying it based on the expectation of it mooning, of a future value. And so when people's expectation is at its zenith, at its high, it's represented on the price chart. Now, going back to Bitcoin, what does the ETF mean for Bitcoin at this point? In a bear cycle, that's different. It is different. This time it is different. So we'll see. But I'll tell you something right now. It's not pumping the price. And maybe this news the last 2 days it is, but when you read the news, because they have to, fortunately, I only have to do a live stream a week. So I can compose all my thoughts. I don't have to say something every day. I can choose when I make a post. And typically I only do it when there's opportunity. But you got to remember that mainstream financial people, they have to they work a full-time job. They've got to publish something every day. So when they publish Bitcoin up on news, yeah, it's up. Yeah, Bitcoin's up on that news, a good 3%. 3% is big for stocks, but not really for crypto. But really, we got to zoom out. You should always do this. I think the people that do financial media, they don't regard price. They kind of validate this whole TA is useless kind of thing. Does this really change where we are? Is it really that monumental that Bitcoin is up today on that? No, it's just noise inside the range. I mean, Bitcoin has moved a lot more on a lot less, or completely unknown reasons. So it's interesting, but it's not necessarily bullish. And people have been able to access GPTC for a long time. And people will say, of course, that GPTC is different because it's a trust, and it also has a lot of expense costs that have made it undervalued versus Bitcoin. A lot of people have lost a lot of money on trying to do an arbitrage on the Grayscale Bitcoin Trust over the last few years. So we shall see. We shall see. Nice little pump today, though. Yeah, a little end of day pump. It was interesting this week because when we had the FOMC on Wednesday, that was here. So crypto dropped on the interest rate news, which I thought was interesting. And then on the stocks on the other hand, on Wednesday, they did a drop in recovery. Bitcoin didn't. So a little divergence that I noticed on Wednesday when it finally broke out of that daily cloud. So stocks and crypto are finally decoupling. They are finally losing their correlation, which is a good thing. So, all right, let's catch up on comments. I got a couple of stocks to look at as well. If you guys got a comment, make sure you post in the chat. Links are below to my Discord community. Just join, share your ideas. That way I can look at stuff. I can't look at every single thing out there. I try, and I try to post everything that I see. So let's catch up on the comments here. So, yeah, so there are already different products, BITI and BITO ETF. Her BlackRock 530 and one record for having ETS. Oh, yeah. So, I mean, it's going to be, I mean, I'm not going to sit down and read why the SEC would have rejected the Winklevoss twins or why the SEC would have rejected Grayscale. But maybe they write an opinion in there. But I think by and large, there's just probably an incestuous relationship. People that work to the SEC then go and work at BlackRock, and they know people. I mean, come on, it's bureaucracy. Every time that people complain about the things the SEC are doing to Bitcoin, as they have been recently with Binance and Coinbase. I remind people to vote harder in their next SEC election because, after all, we live in a democracy, and so our voices should be heard. So make sure that you go and vote for your SEC director position, and make sure that you elect a bureaucrat that is pro-Bitcoin. So you do that in this democracy that we definitely live in. It's funny. I like CZ's comment about the SEC. They didn't sue FTX. For all that talk of them protecting consumers and investors, they come in afterwards and fine the people doing things right, but they never stopped FTX. America will get left behind in crypto. It does. I don't want to say yes because I want to be optimistic, but it does seem like we're trying to. From trying to levy excise taxes on Bitcoin mining, regardless of their energy source. In other words, the Biden administration wanted to levy a 25% excise tax on the energy used, even if you produce it yourself with solar panels. It makes no sense unless you just don't like Bitcoin, which they don't. SEC trying to make regulations about securities. I mean, it's the stark difference between Bitcoin and actual securities is becoming more and more clear to me as I crystallize the way I look at them. A security is an asset that represents value or ownership in something that produces something, like a stock that you're owning part of the revenue of the company. It can entitle you to dividends, or you can just buy it for the growth, the expectation of future value. Tesla doesn't pay a dividend, but you're owning part of the company. They sell cars, and they also have a massive AI self-driving database. That's a lot of future value there, especially they license it to other companies because it's so good. Hopefully. I actually test drove a Tesla today. They didn't have the full self-driving beta enabled, which made me, my expectations were up here from watching some YouTube videos that I could just take my hands off the wheel and it would take me from one parking lot to the next. And instead, it yelled at me when I took my hands off the steering wheel, and it makes some really weird, scary choices when trying to change lanes. So it was just a matter of my expectations being up here. And, happiness is a function of expectations and outcomes, basically. So, but anyway, I digress. You own a stock because they're making Teslas. They also have a product they may sell later. You buy a bond. Bond pays you a coupon, and then later it pays you back the value. These are securities. Crypto is not a security. That's because crypto doesn't actually produce anything of value yet. I hope it will, but right now, crypto only goes up on one thing, and that's cash inflows. People buying it with the promise of that crypto itself having future value. Bitcoin, especially because people are buying it because it's scarce. That means that as long as more people want it, there's more people being born every day, and there's a fixed amount of Bitcoin, Bitcoin goes up. That's the only real intrinsic value that it has, is that it is scarce and immutable. Not even going to go into ordinals and stuff like that, but that's just why. People kind of think that Ethereum has some intrinsic value because of smart contracts, but here's the question. How many businesses do you know are using cryptocurrency of any form to do any part of their business? I can't think of any, unfortunately. Not saying there won't be in the future, but at this point, crypto is 14 years old. 14 years into the internet, we had email. Companies were using email to save on postage. They were using email to send brochures, saving on paper. They were keeping online databases, websites where you could order things, reaching out to customers, doing more sales. The advantages of the internet, while they weren't fully flushed out, 14 years in, were starting to make themselves apparent. Scarcity and monkey pictures. I don't see any businesses using that to make more money or save on money. It's just not. And as far as cash remittances, you got to, well, if you don't remember, when Bitcoin came out, we didn't have Venmo. We didn't have Zelle. We had PayPal, but people weren't really using it that much. And you couldn't do it. Well, you might have been able to do it on your phone. But now you have all these standard US dollar denominated payment systems, which have basically taken the market share that Bitcoin could have had. So that's not really going to work. So what does it do? Well, unfortunately, it doesn't do anything for business. But also means that it's not a security. So the SEC shouldn't be regulating it. In fact, people should have been a lot more resilient. And now everyone's realizing, oh, wow, this government could really be an impediment to progress in the crypto sector. Maybe we don't want so much government. Why did you invite it in the first place? Oh, we want a good regulation. You don't get to pick anywhere. You can't use PayPal. You can use cryptocurrency. Yes. Cryptocurrency is very good for drug dealers that want to buy pizza, or Iranians, as you may be. But that's always been the point. So actually, back in 2010, when I was flushing out the idea of Bitcoin, what got me into Bitcoin was this. And I thought about this because there was the Arab Spring. This was maybe a few years later, but I remember Egypt. When did Egypt close off its internet? Hold on, let's see here. Egypt cuts off internet. This was 2011. Okay, so Egypt was having protests, and I remember they cut off internet and cell service. But I did this mental experiment of mine. Like, what if someone was running a Bitcoin node inside of Egypt? That was back when you could mine with a standard PC, and they could talk to each other on the localized network, even if Egypt had cut off. And because you can't break the system, essentially what these nodes and miners would do, was they would do the transactions inside the borders of Egypt, inside the internet. And all you needed was for someone to make a cell phone or a satellite call with internet, do a brief but robust enough connection to tie it to the rest of the world, and then those would come together, those two chains, they would sync up and things would work again. So it was resilient to censorship. And I was like, this is the answer. This is the answer to government censorship and confiscation. So the government can't stop Bitcoin. And then people came in a few years later and asked how much they wanted to let the government steal. I mean, tax. So it's had a lot of good ideas. It's had a lot of good promise, but the problem is people are not fully using it to its potential and instead thinking about it in an old way. And they're taking it down a rather bad path. It's been very hard for me to watch something that I was really excited about kind of miss out on some things. But anyway, I look at it now as a trading instrument rather than the future of money, unfortunately. Because let's just face it, if it's going to become the future of money, if it's going to replace the U.S. dollar, do you think the U.S. dollar is going to go quietly? No. I think I've had these debates with people before where they want Bitcoin to be transparent for auditability so that it can't have a bug that can inflate it, because that would be an existential crisis. But I think that legal and prohibitive restrictions would also be an existential crisis. But anyway, let's get back to price and off of tangents. All right. Bored and Hungry is a cryptocurrency themed fast food restaurant in Long Beach. Let's see, what's this? Food Fighters Universe. NFT restaurant. Okay. So, they opened at the peak of NFT hype. Are they still open? Yeah, April 9th, 2022. That was a little bit after the peak. They probably really got the idea at the peak, but it takes a while to do anything. Well, good for them. I wonder if they still take cash, though. I remember when I was trying to buy Bitcoin in New York. I was trying to buy lunch for 1 Bitcoin, and it was really slow, and a line formed. And the people that had thousands of Bitcoin at that point, they paid cash because they didn't want to spend any. And that's going to be the way it is. Nothing's really changed. All right. Sorry, C. Let's look at stocks. Let's pivot halfway through. So, interested in my TA on the following, Johnson & Johnson. So anyway, if you guys got things to look at, post it. Let's do a little bit of market. So J&J is something that I bought in 2021. This was when it did, I believe, a pullback to here, March of 2021, because I remember it did this little maneuver here from October 20 to here. I was looking for something to buy early in 2021. Everyone was talking about inflation. What's going to be more resilient to inflation than consumer staples? And it has paid a meh dividend, which I've reinvested. So it's definitely up, but definitely not yellow gains. But man, it still held that 153 level from 2020. So nice little hit here in June, early June. Man, look at that. So there's you a long-term support level that it's held right there. That's good. That's good. Is that also a 50% if we take it from the COVID to all-time high? Drum roll, please. Not quite. Not quite. Not quite. But caught in a range. This is a company that you buy and you don't expect to YOLO go up on you, but also to maintain your value. And so that's what it's basically been doing. So I still own J&J. It's a good long-term, but you're not going to get rich overnight on it. So Amazon, I have been saying all year that this is basically one of the trades of the year. It's basically 90. Well, I mean, it's gone now. 94.20. I mean, I've been harping on this all year long. 94.20 is the 20-year 50% retracement. It came down to it in the fourth quarter last year, starting in November. That last leg of the bear market we had. Pullback that most people didn't expect because, I mean, it's hard to imagine. It's hard to take a chart like this. It's hard to take a chart like this and imagine it pulling back that much. People don't expect it, but it did. And I tried to catch it on the way down, try to catch it in March of 2022, and it got stopped out. But that didn't mean I didn't go in on this one, because that was a really good level. I was trying to first play the sensible route of taking the 50% retracement from the COVID low to the all-time high, which made a nice little touch. I was real proud of myself. I was so proud of myself to catch, I believe it was this second hit right here, because it was like a little false one. Took a little bit of profit on it, but ended up having to close out the rest of the position when it broke below that level. But that was a validation of a 50% retracement working as a trading level, but it still had more to go. But yes, 94.20 was the level. I think a lot of people are expecting the stock market to pull back again. I think last week I shared a quote about when there was a volcano in the year 532, and people just assumed that the sun would never shine again. People get in this mindset that whether something's going up or something's going down, it is sure to continue. Unless you're in crypto, and then if things go down, you tell yourself that it's going to go up again. But especially in stocks, people just assume that the economy is going to fail. All this stuff that we're reading that's good about the economic situation, the job market, is fake, and why the stock's going up now is not real, and you shouldn't buy it. Blah blah blah. Okay, all right, we'll see. The problem is I've heard this same FUD, these same arguments from the smartest of people that are paid to put out sensational stuff every day for the last decade. And market go up. Stocks go up. Remember stocks go up from 2021? They weren't going to go up forever. 2022 was bearish. You had a pullback. Nobody wanted to buy it, which tells you it's probably the bottom, because nobody wanted to buy it. My Discord went quiet. Nobody responded to the post to buy Amazon. Nobody responded to the Tesla post. Now they're asking, though. Starbucks. I don't really see a level, but it's bullish. It's going up. I would say try to get a pullback on this short-term trend right here, possibly to 91, 94, but make sure that you trade it. Make sure that you give yourself a stop here. Don't let it come back down to 68. It needs to hold. That's a big retracement in 2022. But this leg up, essentially, we've had a big move here in the stock market. Let's zoom in. This is the ES we're looking at, the S&P 500 futures. What price is trying to do at this point is test. It's trying to get up and test the all-time high of the stock market. Now, will it get there? I'm not going to sit here and tell you I know what it's doing, but right now it is going up. But if you want to try to get in again, then you need a pullback. Now, I think it's unlikely that we get a pullback to 4,000, even though that would be the 50% retracement. But it's possible that we get a retest up to the high, and then maybe on some economic calamity, we pull back to here. But when the stock market gets going bullish, it has a tendency to just not really give you that super awesome opportunity that you promise yourself you're going to buy, but you never do. I mean, essentially, what did we get? Well, we got a good and proper, perfect 50% pullback of the entire market from the COVID low to the all-time high. And in October of last year, nobody was rushing to buy it like they said that they would if we finally... Just imagine, like, if someone in July of 21 or November of 21, when things were going crazy, if it had pulled back to here, people would have been like, gimme. But that slow grind down, those fake outs, these little pushes up, that really grinds on people's nerves and makes it virtually impossible for someone to have the emotional temperament to buy it when it pulls back to there. But now you got to wait. Or you buy it now and you just don't worry about it. But it's this year, it's already halfway over. You're getting into this late. So Tesla. So Tesla, again, people keep asking me this week and last week, should I buy Tesla? No. What you should do is go and get a time machine and go back and read on Discord, also on TradingView, where I posted the textbook, absolutely textbook patterns that occurred in April, late April, right in here. Right when it pulled back to the 50% of the January trend. There were so many amazing examples of Ichimoku breakouts, for instance. Let's see, that was a 2-hour. There was a 15. No, it was actually a 15-minute. Let me bring up the spikes. Yeah. So after it hit that level, I talked about this last week. We had a spike, pretty significant spike here on a 15-minute level. Actually, that was preceded by a 5-minute as well. So very low intraday setup was what actually triggered this big move up, and everyone was ignoring it. So no, you can't buy Tesla now. You had to buy it weeks ago when it was ripe. Now, where is Tesla? Well, just as I trust in breakouts and I trust 50% levels for entries, I now have to sit here and trust, oh, I was going to wait and see at the end of the day today. Okay, we closed this week above the 258 50% retracement from the all-time high to the 2023 low, but we need to give it at least one more week, get 2 weeks to close above or below that level. It's very key here, but the one thing you don't do, you don't have to short it, but the one thing you don't do is buy it here. You either wait for it to pull back or you wait for at least 2 bars to close, and then maybe you can start scaling into it as it goes forward. But at some point after, what is this, 5 weeks of just big old green double-digit % bars, you can't buy it. You especially can't buy options. Nope. No options. Buy shares. Come on. Get something that's going to be worth something 10 years from now, okay? Like, I get so frustrated. Although I admit that now, as opposed to the years past with VIX, the volatility index, which represents the prices of options, the implied volatility of options, is low. So it is actually better to buy calls now than it has been at any point in the last 2 years because volatility is so low. Still, you really want to own something years down the line. That's how big wealth is built. So if you are doing options, if you're really big on options, admit that they're just lotto tickets and just have them as kind of like a hobby. I mean, there's ways you can trade options as sort of an income generating way. You can make money on them, but then take that cash and put it into something longer term that you don't look at. Man, it's not going to bug you because options can really get under your skin as fast as they move. So we got to wait on Tesla. We got to wait and see what it does at this level. If you're not already in it, you cannot buy it. If you want to short it because you're brave, you can do that. You can take some profit. I'm not taking profit. I'm going to see what happens for the rest of the year, really and truly, unless we get like something like a big red bar right here that's like, whoa, okay, it is hitting this level. Then I have to respond to it. But next week and the week after that, it's going to be kind of critical for Tesla at this 258, let's call it 260 level. So, all right. Let's see. It's not that I don't like breakouts, Stone Pilot. I like certain breakouts. I don't like trending breakouts. Like, in other words, some people, they're able to jump into a breakout like this. They're able to break it when it comes outside the cloud. They're able to jump into it. But the problem I have with breakouts is when you do something like you buy it here, which it'd be technically more like here. You buy it here, and the problem with breakouts is this. In order for you to properly do a breakout, you have to essentially give yourself almost like a 1-to-1. Like even on this Tesla trade right here, you'd have to give yourself about a 1-to-1 ratio, or I tried to do a 1.5 with 5. Yeah, you could have done like a 1.5. In other words, you have to take more risk. You have to give it that much more play to stay in that breakout because it's already going and you create this wide price range for price to play around in. So what I try to do on breakouts, whenever they fit the rules for a breakout, I try to give it a 1.5, but I like pullbacks better because with pullbacks, you really only need to give it a small amount of risk. You may take more losers, but I mean, come on. Breakouts lose just enough as well. So the reason I prefer pullbacks to breakouts, or specifically in the case of Tesla, where we had the really lower small time frame breakouts like down here, because I knew I was playing the 160 price level pullback. So in other words, price after many, many months got down to that level. Now that it's starting to play around at this level, this 160 level, I'm going to look for price to finally get back above the cloud like it did. It also triggered a little spike there. And now you can start looking for a breakout there. But it's a little wonky because, yeah, that's a 5-minute wait. It was a 15-minute. Yeah, so never really, yeah, I like pullbacks. But really good textbook examples here of Tesla as it was going up. So Nat Gas, yeah, let's take a look. Did I hit all the stocks that people talked about at the beginning? Yeah, I think so. All right. Yeah, I'm also on PG. All right. So let's look at Nat Gas. So I got a couple of alerts today or yesterday on Nat Gas. I'm going to use the futures here. So I saw a short spike here on natural gas. This was the alert today. I think it was a 30-minute. Yeah. So there was a little bit of opening price volatility this morning, 9 a.m. to 10 a.m. I'm not sure if that was some news. I didn't want to take this thing short, and I'm glad I didn't. Even though this was, I'll show you what I saw. So originally I saw this. Uh-oh. Is my trading view lagging? There we go. And I liked it because you got a nice little trend coming up. You got a little price range established, and the spike comes up, stops people out to the upside. So I looked at this and evaluated it. My process was this. I was like, okay, all right, let's put the entry at the red line. Our stop loss is above that high. Our natural 3-to-1 is down here at 2.44. Does this make sense for just the initial push? Well, unfortunately, no, it doesn't, because our 50% retracement of this would have been 247. No, don't really want that. Let's zoom up to a higher time frame. What's going on the higher time frame? Well, do I want to short Nat Gas at the point that it's at right now? No. I really would like to see a long on natural gas. So possible breakout happening this week. Well, let's look at it for Ichimoku. Maybe we've talked about this last week. As depressed as the price is and has been, yeah, it's starting to get out of the cloud. Now, notice when price first got out of the cloud back in May, just a few weeks ago, momentum was very far away. It had a lot to get through, and it didn't. So that was a false breakout, but you waited for the confirmation, and you didn't get it, so you didn't go long, and you avoided this. Now you're starting to get into a situation where momentum, the lagging span, can get out of price right as that cloud is coming down. That creates a good situation, and especially when you have something looking like this. This is good. All right, so let's take a look at this. How would I evaluate this? Well, let's look at the last swing high. Let's start from the top right here. There's a lot of things in here, but let's just do this. It's going to be conservative to do that anyway. And we go down to the bottom. A lot of little bottoms right here. Definitely a floor at 196. And so that's going to be our resistance. Let's call it 4.5. So if we get an entry right about probably a break in this region here, we can go up to here. That's our full target. It'll take a while. Might take a few weeks or months to get up there and give ourselves, yeah, we can give ourselves almost a 2-to-1 on this breakout. Yeah, I like that. I like that. That's pretty good. That's pretty good. It does look like it's setting up for a decent trade off of a long established bottom in natural gas. Good stuff. Good stuff. And to get back, I mean, because given enough time, natural gas can move. I mean, we got to think about this in terms of weeks and months here, but it can move in that range for sure, and we can get a pullback to about 4.54. So yeah, I like that for a potential breakout. A little more conservative, probably if you didn't want to take it that long term, is you see the price inflection back here where it found lows back in 22. If you did that, then your shorter term horizon would be looking for that to be your resistance. And then if you were looking to do 1.5, that makes it a little bit better, because let's say it comes up, triggers you in, and then gets back below the cloud momentum as well. Well, you don't really want to take it all the way to the bottom, because that's going to be too much risk. So that's your short-term trade, and then there's your long-term trade. Time and giving yourself a lot more play for the stop loss. FOMC thoughts. I think it was interesting that it was basically rates didn't move. They talked about raising rates into the future, which is surprising to a lot of people, because a lot of people are already perturbed about how high interest rates are for their mortgages, their car loans. I mean, we got really spoiled with cheap money, and nobody likes anything cheap to go away. Everyone wants to go back and refinance their houses at 2.5%. It's very possible, and I think very likely, that we won't see that in our productive lifetimes again. That's possible, despite what a lot of people said just over 6 months ago, where as the Fed was raising rates, they thought that, I remember my mortgage broker told me, oh, let's just get an ARM. The Fed's going to lower their rates, and you'll be able to refinance that ARM into a lower rate fixed in about 9 months. This was last year, by the way. This was last year in about May. He said that the Fed would, basically his argument was, and he sounded very convincing, if I didn't study this stuff on a daily basis, if I was just a regular old person, like, I would believe him, because he was a really good sales guy trying to sell that ARM, which he probably got a higher commission on. He's told me that, we're going to hit a recession in 9 months. So we basically, December, we were supposed to hit a recession, and the Fed will be forced to lower rates. It made a lot of logical sense, because that's what all the financial news was telling us back then. People have a short-term memory. I forget where I put my keys and to go get my mail, but I remember market narratives a lot. Much often to my own loss of sanity, because I get pissed off when other people don't remember it. But anyway, we didn't have that recession. Fed didn't lower rates. They're not lowering rates. 5% historically is normal. It's like super normal. It's like when I first bought my house, my first house back in 2009, my closing attorney was like, when I bought my mortgage, my interest rate was 15%, you young man. That's true. That was the Jimmy Carter years. So 5% interest rate, 6% interest rates on mortgages. The only reason people think that that's not normal is because we got spoiled. Where's our interest rate chart? Effective rate. Let's look at this. Everyone likes to look at this. Yeah, so here's the Jimmy Carter years when dude man was getting a 15% mortgage. But for the better part, I mean, here's a question. How many of you guys enjoy that 4.5 to 5% interest rate you're getting on your savings account at the bank? It's pretty sweet. To which people will say, well, inflation's at 12%, really? You're losing money. Okay, well, at least I'm losing half that, so buy Bitcoin. It's variable, but really, if you think about it in terms of the the past, before things started getting crazy, through the 90s, 7% down to 3%, 5% for about half a decade in the 90s. Had a recession after 2001. They brought it down to 1. I remember this time around 2017 having a savings rate account of about 5%, pretty nice. 2008 hit, they dropped it to 0, and here we are basically back at normal ish, kind of, however you want to define that. It's, we're not going to predict this, but it is interesting to live at a time where things are basically coming to normal, but people think it's so abnormal. So, all right. Yeah, and I've heard that too about people. Yeah, the follow up to that is when your dad says, well, my interest rate was 15%. You say, well, your house cost $70,000, Dad, boomer. Yes, but also a car was about 12,000. I mean, yeah, inflation is different. The prices are different. Nothing, no price is going to go in a straight line. But inflation, as pernicious as it is, it's not the end all be all of everything that goes on in your life. Not everyone goes up in their prices. Not everyone is sensitive in their response to interest rates. I have a lawn care service for my properties, and the lawn care has been paid for since 2019. It's only 4 years, but they haven't gone up on me. Now that's their loss, but or maybe they just don't want to, and they've increased their productivity. So not everything inflates. Housing prices definitely have, but that's because that's where people can get their access to the cheap money the easiest. So that's like right at the edge of the spigot, the money printing spigot. So things happen a lot differently than people like. In other words, the sky is not falling. All right. Let's wrap up here. Anything left that you guys want to look at? Euro USD? Yes. Let's look at the dollar and everything else. Hey, Casey, what's up, man? What you got? Casey loves his breakouts. All right. If you got something, post in the chat. As we close up here, let's look at some. Let's do a lightning round of a couple of things. All right. So, yeah, you go practice, man. I'm going to watch a beer pong tournament tonight. That should be incredibly interesting. Actually, back when I was telling my girlfriend today, I don't know if they do real beer pong, and the reason I say that is because back in college, true beer pong, you actually played with the beer in the cup, and when you landed the ball in the cup, you drank the beer out of the cup. And I didn't realize until much later in life that people thought that drinking that beer from the cup where the ball had hit the grimy college dorm or college apartment, which of course was never cleaned, floor, the kitchen floor, and then putting it into something and drinking it was considered unsanitary. Never occurred to me. Never occurred to me back in those days. I guess it's because young people have great immune systems. They don't have to care about that kind of thing. But people actually have a problem with that, believe it or not. And so now beer pong is done by drinking a beer separately, and then you throw it into cups of water, and then you empty the water. It just Zoomers, man. It's just shaking my head. SMH. Anyway, all right. Cardinal Health. Thank you, Jeremiah. You like your breakouts? Yeah, that's going up. Oh, I wanted to. Okay, let's evaluate your trade. Then I got to make a couple of. There's something I wanted to check before the end of the day today. Uh, so I think I have. Did I have an alert here? Well, it didn't pull back to that. Yeah, you like your breakout, so you want to do 90. Let's just type it in. So Casey wants to do 90.86. Profit level 110.27. Casey, did you catch the breakout? You like your 2-to-1s on natural gas that we talked about earlier? That seems like your style. If you can find an instrument that you like with that, that's the kind of breakout that I like, Casey. Okay, so you entered this break. Okay, cool. Okay, good luck to you. Good luck to you. Let's come back and look at this here in a couple weeks. Save that. All right. Euro USD, sure thing. I think it's very important to look at Euro USD. So Euro USD, let's take off Ichimoku here. And I've been watching this 109 level for many, many weeks. And we're just kind of dancing around. This is the 50% retracement of the leg down from July of 2021 down to September of 2022. 109 has been the level it's flirting around with. Gotta wait and see. Gotta wait and see. 109 is really, really key. And that's going to correspond with dollar 102, which they're going to be inverted because euro/dollar. And euro dollar makes up much of the dollar index. And so it's come down, and that 102 is key here. So they're both kind of at this level. They're once again testing it to see where it's going to go. I think, though, that you have to assume that it's going to just be a pullback for a trend continuation. Could be wrong. We could get a breakout, but we'll wait and see if that happens. And so likewise with euro dollar, I think you have to assume the same thing. But if we can get some kind of a little push up here, possibly. Dollar yen, well, this is just a textbook example of when something pulls back to its level, and it is definitely coming back up to test the high up there. But that's because the Japanese, they don't care about their currency. They're just always trying to deflate it to get their economy moving since the 1990s. So yeah, good to look at that to see what's going on there. HTZ. Is that Hertz? Ugh. I've been noticing a lot of these fun stocks from 2 years ago are starting to get a little pump. What do you want to do here, Jen? Zamian says, when there's a form of unity, though, it's not perfect, it's good, and brings to security. Also, a unique currency will bring unity, but we won't see those times. Will take ages. I would like to see a unique currency. I would like to see people, individuals, be able to exchange the idea of wealth. In other words, you guys appreciate my live stream. You send me a thank you message. It makes me happy. That has given me value. I want to take that happiness and I want to give it to someone else, which I can, and I can reproduce it. But imagine that was money. Imagine good vibes were actually like a token that you could pass to someone and someone feel good. That's the same thing when somebody sends you $1. Makes you feel good. You got $1. It's an idea of value. Same thing when someone sends you a Bitcoin. You now have an idea of value they've sent to them. So this idea of currency in the modern electronic era needs to be seen as a way of exchanging the idea of value. Now, we believe as a principle that we shouldn't censor people's ideas. We should let people have freedom of speech. We should let people share their ideas. So why don't we let people share their idea of value? Why don't we let people share their currency with each other without any interference or censorship or theft? I think we should be able to. And hopefully some people come to that realization, but people still asked a few years ago how much they owed on their Bitcoin. So I won't hold my breath. All right. Pound dollar has been doing well. Yeah. I remember we looked at this a couple weeks ago. Yes. So this is what you want to see with euro dollar. And in fact, it kind of looks like, all right, take this idea in your head. Okay. All right. This is pound dollar. This is euro dollar. Okay. So what we want to see is we want to see pound dollar break above that 50% level. It just did what euro did. Held it, kind of flirted, went above it, pulled back, held. Oop. That's key. That's key. That's key. When it pulls back to that level and then it creates a floor, that's going up. That's what you want to assume when you see something like this. So we need to look at euro dollar to see if it does something similar to that. We do. All right. Let's see here. KPIT. It's an automotive software developer company. Well, Oh, and I got a couple of things I want to look at too. Wait, is this KPIT Technologies? It's going up. If this is what you're talking about, then I would be interested at 600. I'm not going to buy it now just because that's not my style. Thanks, Wiki. Oh, Microsoft. It behooves me to take a look at this because I noticed that today, like with all things, I'm looking for false breakouts, especially at major highs. And oh, what do we have here, Microsoft? This is a weekly chart where you have the all-time high, November 21, this big bullish run that we've had. Brought it up this week. Today we opened above it and we closed back inside it. Uh-oh. So next week we need to come back and look at Microsoft. In fact, let me, because what we don't want to see is we don't want to see a red bar. Let me note this on my Discord. By the way, guys, if you are on my, yeah, I'll look. Oh, thank you. See, Huna posted it here. If you are on Discord, links down below. I have a live stream notes as a thread underneath everything trading. So I have a live stream. If you want to look at something in the live stream ahead of time, post it in my live stream notes, or just post it in just chatting, and I'll take a look at it. So let's see. Huna wanted me to look at Rivian. Ah, yes. All these things from 2 years ago. So I actually own some Rivian. I think at about $16 a share from back around, no, it was, where was it I bought it? I think it was probably in this range right here, more 17, 18. There was probably a setup in here. And I just kind of left it and back held it. So when are we going to get out? Well, like a lot of things, enough time has passed where we do have a potential to get momentum out. Oh, hang on. To get the lagging span out at the same time that price is out. So there's a possibility that a lot of these stocks from yesteryear, a lot of these things that have been dogs over the last couple, have a chance to get out. Palantir is one that my friends have me in, and it's been doing pretty well. Really hope they don't shoot themselves in the foot by trying to short it. Maybe on Palantir, if they want to look for something at 1750, that's fine, but not before. But that's actually been doing pretty well. Just don't just shoot yourself in the foot when you get into a winter, especially after you've been sitting there for years waiting on it to go back up. Don't do that. All right. Microsoft looks like XLK. Well, close. It does, definitely. So that's an interesting catch. So XLK, which is the Spider technology ETF, looking a lot the same. I mean, it tells you one thing, that Microsoft is moving with tech, and tech is moving because Microsoft's in it. But yeah, I think that obviously all the tech stuff. Let's look at NVIDIA. Has had quite the run. NVIDIA, that's an example of something breaking its high and never looking back. That's what you want to see. But it can be affected by the winds of fortune or non-secular market forces. We need to come back next week and see what Microsoft did at this high. Let's face it, this has been a really bullish couple of weeks for the stock market. You don't really usually get 5 big bullish weeks. So if there was a red week next week, I would not be surprised at all. If there wasn't, it was another green week, I'd be like, okay, too. But yeah, I'm going to be looking for a pullback in the next couple weeks. I mean, this is summer. Summer is typically very slow. And so for us to have this much movement in the summer, it makes me a little, maybe I'm cynical, but it makes me a little wary about what's coming in the rest of the summer and then into the August, October kind of scary range where historically you have big old crashes. But that's for another time. That's for another clickbait. Thank you all for joining me this weekend. I hope you all have a good weekend, and I'll be back here next Friday. I will be going on vacation, so I may miss the weeks following, but until then, trade wisely. We'll see you guys later.